The forex market never sleeps, and neither do I. So let's go and see what today's charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260K reputation points. And every day I share a lot of free education and analysis for all of you. So make sure that you subscribe to the channel, and I will see you on the charts. In today's video, I want to speak about USDJPY. Now, why do I want to speak about USDJPY? Because at the moment we do have quite interesting price action and structure. So what I will be doing is, as usual, provide a complete multi-time frame top-down analysis. Starting from the higher time frames, we will then go on the lower ones. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that from here, the market has created a very strong rejection to the upside. Now, we had spoken about USDJPY when the market was around this area, testing this very strong previous monthly demand and support here. And I explained all the reasons for which there was a good probability to see the market create this rejection to the upside. And in fact, that is exactly what the market has just created here. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. But at the moment, it's quite clear that on the monthly, we just created a new high, breaking above this previous high that we had here. So this is now previous resistance, which is now turned support, and we can expect a correction before then, more continuation to the upside. So at least by looking at the monthly, we can expect short-term bearish price action before then longer-term continuation to the upside. Dropping down here on the weekly, we can see how also in the weekly the impulse to the upside is quite clear. And generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement lining up exactly at this area that we have a good probability to go and test before then printing more continuation to the upside. So here in the weekly, as well as we have already seen also on the monthly, we can expect some short-term bearish price action before then longer-term continuation to the upside. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we see now? Here on the daily, we can see a strong impulse to the upside, and at the moment the market is starting this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have 50% and most importantly 0.618 Fibonacci retracement, which is currently lining up exactly at this previous resistance turn support, creating a quite strong cluster of support and demand that we can expect this market to test and then reject to the upside. Now, if we go and see what we have from a COT perspective, so what the non-commercials, so the biggest players in the market are doing, so hedge funds and the biggest speculators, what we can see here is that lately on the JPY, net positions have been dropping. In fact, we're currently sitting with minus 76K net positions, so way more shorts than longs from an institutional perspective on it, with 112K short positions and only 35K longs. So the JPY is currently getting very bearish, and we see this clearly reflected in the price action with USDJPY exploding to the upside. So since the trend is so strong, we can expect the market to complete another impulse correction and impulse pattern to the upside, rejecting this previous resistance turn support. So how we will be approaching this potential longing opportunity with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding USDJPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice potential long with a good risk to reward and good probabilities for the move to the upside and for the market to potentially complete this impulse correction and impulse pattern to the upside and possibly even provide a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description and I will see you in it.